For those looking to trade the Forex or any other financial instrument with a more traditional grid setup, where you buy and sell the market at all times, here's an example of a setting which one of our clients is using. This particular client has a starting position size of 0.02. This client has increased the volume exponent size up to 2.3, and this client wants to buy and sell the market at any given time. A quick word on the pros and cons of using the moving average feature in the adaptive grid blazer. If we're using the moving average feature, we are trying to align ourselves with where we think prices are going. So we're trying to have the grid system trade according to the trend. Now, that's great, and that can give you long periods of relative peace of mind when you trade. However, you also have to consider that we're not making money in both directions at any given time. And that could further the distance, and it could mean that we would take longer to exit a trade. So there are pros and cons of using both approaches. The disadvantage of buying and selling at every single moment in your trading is that you're always going to be on the wrong side of a potential trend. So there is that as well. As a general rule, if your currency pair or your financial instrument tends to trend at least 50% of the time, I would suggest using the moving average feature coupled with trend follow. If your currency pair is like half and half, or maybe ranges a little bit more, you should certainly consider turning off the moving average feature. So in this example, we're trading the dollar Canadian on a 1 hour, and the client has set up the volume exponent to 2.3. He allows the bot to buy and sell at any given moment. Also, as you can see, we disabled the moving average feature, and we're not using trend follow. As for the grid sizing, we're looking at the past 4 candles. We're setting the grid size according to the pip step multiplication of 15, and we set our grid size between 50, the smallest allowed, and 1000, the highest, a number which we will never reach. But should prices explode, we're not going to open a grid until 1000 pips have moved. Let's see how that actually pans out when we trade. Okay, so off we go. So here we can see the client wanted to both buy and sell at any given time, but he also wanted a configuration that where prices could move a lot without he having to be nervous for what's happening in the marketplace. And you saw here there was a huge move up. We waited before we opened the grid, and you can see the grid sizes being calculated in real time in the top right corner. So when we have very little movement, we decrease the size of the grid, and when prices move fast, we increase the grid size. You'll notice that prices don't need to retrace very much in order for us to exit with profit, which happened here, for example. And that's because even though we have the adaptive engine configured to be fairly sensitive, we also have a fairly high multiplication factor of 2.3. So that's the result of that. Pretty much is set and forget setting where you need to check in once in a while. And it's specifically well suited for very small account sizes where you really don't want very much of a drawdown. So there it is, an example when we both buy and sell the market at all times. We have the adaptive engine turned on, but the moving average feature turned off.